What's going on, guys? Mike Sheamer here. Just on my way to the gym in the Frugal Escalade, as always. And just giving you guys an update. It's been maybe around 6-7 weeks or something since my last video. So a lot has changed in that period of time. As you know, a lot of changes have occurred politically and economically. And so overall, since I'd say kind of end of January, early February, even into mid-February, and all of this is good timing, by the way. I partly got lucky. Decided to exit out of my income ETFs, and then I exited out of almost all my ETFs aside from a couple index funds. So I am almost completely out of the market, definitely out of high income ETFs and most dividend stocks, but cashed out, made a good amount of money, learned a ton of information, a ton of good lessons, paid some taxes on some of the earnings, some of the dividends, distributions, capital gains. That's fine, I had to pay what I had to pay. It was just a chunk of, some of my profits. So who knows what that amounted to. That's for my accountant. So, 20% or whatever it is. So I met some great people, other retail investors, as well as financial professionals. So I'm grateful for all of the the new friends and or just whatever connections on social media, that kind of a thing. So really cool overall. I think I've said it before. It's not my quote, of course. It's been around forever. Bulls make money, bears make money, but pigs get slaughtered. So that basically means there's people who are going to make a lot of money in every single market, whether it's going up or going down. But if you get too greedy and you get a little too aggressive, you get a little bit too ambitious, then there's a chance that you're going to lose a lot of money. And I've spent years working on these portfolios and doing research, doing a lot of trial and error, and I certainly wanted to quit while I was ahead, and that's what I did. And luckily, I think the two highest points in the market were the all-time highs, ATH, I think mid to late December, and then middle of February. So I was not selling at all-time highs, but very, very close. Which in the short term is fantastic. Who knows about long term or somewhat long term? I mean, it's gonna very long term. Of course, the market is gonna probably go up as it usually does, but who knows how long that's going to take at this point. So anyways, cashed out, profited, paid taxes, learned a lot, met great people. So the reason why I did that was because, to me, after a lot of trial and error and seeing that the market was kind of turning the corner, I've been saying it's so high, it's way too high, artificially high, whatever you want to call it, for so long. I've been thinking that for 2 or 3 years, and it wasn't going down, so I decided to kind of ride the bull for a little while, but I've been predicting it was going to go down for so long with a correction or a huge drop or a recession, but with the tariffs and other indicators that I've noticed, I wanted to get out, at least for a while. just too much of a headache, too much stress. And it appears to me like things are kind of on the downswing. And it could be very significant beyond the 10% correction we've had. That could just be the tip of the iceberg, in my opinion. And I hope I'm wrong. I hope I'm completely wrong. And you guys make a ton of money, and I'm just making 3 or 4% of my high yield savings account, and I got a few other conservative little things too. But I'm focusing more of my energy on my businesses instead, businesses and health as well. But yeah, so with there's going to be, there already has been huge government layoffs. Some of them have been reversed, but a lot of them are going to stand. They're going to continue. There's the government shutdown risks. National debt is at over $36 trillion. U.S. this is just U.S. alone, household total debt is over 18 trillion, probably closer to 19 at this point already. They just don't have data yet since December, I believe. Layoffs are already happening due to AI. More AI adoption, more AI advances, and it's a very volatile, growing, game-changing industry, of course, growing, but it changes very fast. Like I said, the tariffs are going to cause huge issues, I think, in terms of raising more prices for U.S. consumers, which already have some of the lowest confidence levels in years. Some people are saying like the lowest confidence levels ever. I think that's exaggeration, but people are definitely they've been feeling the squeeze for a long time. There's $1.2 trillion at least in U.S. Credit card debt, and most people, 50, 60, 70% of people have zero money saved for retirement. They have zero emergency fund, or they have under 1,000, under 5,000 in their emergency fund. And all you have to do is, think about what would happen if they got laid off. What would happen if the price of, weekly and monthly staples increased by 10%. What would happen if they had a health issue and that led to large out-of-pocket expenses, medications, copay? Just any little thing, a car accident, a new baby on the way, an injury that keeps you out of work. Maybe you lose an entitlement, you lose a protection due to the new administration, and all of a sudden that $1,000 or that $5,000 is gone very quick, and you got nothing, and you're in debt. There's going to be bankruptcies, there's going to be mortgage foreclosures, there's going to be people getting kicked out of apartments. I've seen the jobs. The job market has tightened very fast in the last several months, last year, something like that. It's been very noticeable. You see jobs, just decent jobs, not even like great ones, $50,000, $60,000, and there's 100, 200, 400 people applying for them. And there are certainly different industries that are short jobs. There are industries where they can't fill the positions. There's no skilled workers. The trades are one of them. Like certain food restaurants, anything that basically people have to work super hard at for as like a blue collar or a physical labor job. I mean, you might have better luck in those departments, but a lot of white collar jobs and tech jobs have disappeared very fast, being replaced by software, AI, layoffs, budget cuts, and that's even as tech companies reach. Some of them are, still getting excellent profits, so they're just kind of cementing their profits and growing them. And if you look at some of my other videos, I've already talked about this. Talked about this like a year ago or 8-10 months ago. Like, are you ready for the new economy? Are you ready for the next digital age? And so, I mean, I've been talking about this for a while, but it's really kind of turning the corner. There's so many other factors. So I go to Dollar Tree, I love it for fun. I used to have to live on it, basically. I made such little money as a personal trainer and an assistant fitness manager. So, I mean, it holds a place in my heart because it kind of helped me get through some times where I always had money. I was always profitable. I never had any debt, never had any whatever, but I had to go to extreme frugal measures to make that happen. So I keep going to Dollar Tree, and even if you spend a lot, you buy a lot of items, you can't get hurt there. You go to the grocery store, if you buy too many items, you're in trouble. And people can't afford the grocery store anymore, or non-discounted shopping places. So Walmart's doing pretty well. Dollar Tree, Dollar General are doing relatively well. Amazon, of course, doing pretty well, but people are buying less. And but I have noticed, just in the past few months alone, the lines outside of Dollar Tree, they're always short-staffed, so it's not about that. The lines outside are 2 to 3 times longer than they were just a few months ago. And I go to Dollar Tree all the time. Every single time, big lines. The shelves are even less stocked than normal. And it's not from lower staff, budget cutbacks, whatever. It's budget cuts. It is more people shopping at Dollar Tree because they don't have the money to shop other places, and it's just kind of putting a Band-Aid on it. So some of the items, I mean, if you use common sense, if you're buying in bulk, you probably even get a better deal at a lot of places compared to Dollar Tree. But if you're just buying something to get by for the day or the week, something little, then it's easier to spend $1.25 on something to get you through the day or the week, at least in the short-term mind of a lot of these people, than buying $20 at BJ's or Costco. And then, I can't spend $20 on whatever, even if it'll last me a year or two. You have to realize how people think. But I just want you to think about kind of what items... what stocks and what funds and what ETFs are people going to and crypto, real crypto, meme coins, whatever. What are people going to sell off first and in huge amounts if the market continues downward spiral, if the economy continues in a downward spiral? Are they going to sell their super risky ETFs and their super speculative cryptocurrency or meme coins or SHIT coins? Yes, that's what they're going to sell first, almost guaranteed. And that's why some of those have lost, while the stock market has lost, 8 or 10%, depending on, what the index is. Some of these crypto coins and ETFs have lost 20-30%. I mean, much higher amounts, much less stable. And you just have to ask yourself, I'm not trying to single out any fund or any cryptocurrency or any meme coin or any meme stock or any, small cap or micro cap stock. I'm not trying to do that, but you just have to think about what stocks are going to be the hardiest, which ones are going to weather the storm the best, and which one is going to give you the best total return, and which ones are at risk of, I don't know, I'm not going to say like full-on collapse, but, and what companies are more vulnerable to a bear market, and you just want to keep that in mind. And I just didn't want to. I'm kind of opting out of it. I don't want to deal with it. I've got a lot of cash, financially secure. My family is very secure. I've got money coming in passively and actively. I don't need to risk my nest egg on, some brand new, relatively untested ETFs and, stocks in very volatile industries. But I mean, if you're getting like, VU, if you're getting SCHD, a few blue chips, some of the top tech stocks that really, kind of control the world, I mean, you're probably going to be fine, and you're probably going to end up earning more money than me, and, maybe I'll look stupid with this prediction and these actions. Time will tell, but I just wanted to put it out there. Some items for you to think about. There are many other economic factors that I've looked at and discussed with people on X. I put it out there, not for FUD, not to like be a fear monger, but just to be on the record. This is what I think is going to happen. Hopefully I'm wrong. Maybe I'll be completely wrong, but I'm fine. I'm fine with making my small, guaranteed, insured amount of returns on top of my business active and passive income, and my wife's and mine, the small amount we still have in the market, in different ways. But I just wanted to give you a heads up, since I've done so many videos in the past of very aggressive ETFs, very kind of risky holdings, and that's just not what I'm doing anymore. And I'm not telling you, this is not financial advice. I'm not a financial professional, but that's just, and now I'm gonna take a break for a while from the investing side of things, as I've outlined. But I might do some new videos on more marketing or SEO or frugal fitness. I'm considering bringing back frugal fitness, kind of a dad bod edition. I'm almost 40 years old, so we'll see. And I'll keep you posted, but I don't know if I'm going to be putting out more videos sooner or later. And other than that, I'm staying super busy. I got to try and get, lose some more weight, get into swimming if I can. Good for low impact for the joints. So thanks again for watching. Sorry it's another car video. Stay frugal, and I wish you the best of luck in the job market, the economy, the stock market, whatever you have skin in the game with. All right, thanks guys.